Good morning, welcome. You're watching Market Cafe on ET Now. I am Harsh Saita and with me is Ankita Saxena. This is the show where we take you through all of that's buzzing in global markets as well as what ought to buzz in Indian markets later today as well. So let's start off with global cues. Ankita, how were global markets? Take us through them.
Thank you, Harsh. Now, CPI number came in line with the expectations, and it was a bit of a breather that inflation might just be cooling down. So, the important CPI number was out for December yesterday, and it posted its biggest monthly decline since early 2020. The CPI number fell 0.1% for the month, in line with the Dow Jones estimate. Now, that equated to the largest month-over-month decrease since the April 2020. Now, even with this decline, the headline CPI rose 6.5% from a year ago, highlighting that the constant rise in cost of living is still weighing down the markets. Now, excluding the volatile food and energy prices, the so-called core CPI rose 0.3%, also meeting in line with the expectations, and the core was up 5.7% from a year ago, once again in line with the market expectations. Now, on the back of that, the markets obviously rallied. The Dow Jones Industrial Average gained 216 points, was up more than 0.5% in trade. The S&P 500 added 0.3%. The Nasdaq Composite closed up more than 0.5%, marking five straight days of its winning streak. Now, that's the first rally of that length that the technology-heavy Nasdaq has seen in a while. In fact, since July, it hasn't seen this kind of a rally. European markets also took a cue from the US markets, and they closed at their highest level since April 2022, despite a choppy afternoon session, after which the US inflation data came out, and of course, the US markets also ended the day in the green. The Pan-European Stock 600 closed up 0.7%. The most of the sectors and all the major bourses were in the positive territory, ended the day in the green. DAX and CSE was also up 0.7%, and the FTSE was up 0.8% in trade. So that was a roundup of the US and the European markets. Harsh, how is the crude faring? Was there any movement in the crude post the inflation data?
Well, when I'm looking at the data versus yesterday, Ankita, there's not really much of a move. But otherwise, we did see crude spike up a little bit versus where it was pre the inflation data. Now, mind you, post the inflation data, we have several governors come out and talk about a lower rate hike, which will mean that essentially there's going to be a larger focus on growth. So really at least that's the anticipation, that the commentary is shifting. There's a small shift which is possibly coming through going forward, and that's what crude is really building in. You can see the WTI oil 1.2% higher, Brent up 1.4% up. But when I'm looking at it versus yesterday, status quo. So we're looking at oil at $78 where we saw it yesterday this time, and we're looking at Brent also at that $83.5 per barrel mark. That's where we are currently at where crude is concerned. Of course, the demand is expected, or rather there's the larger demand that most analysts are penciling in, is that crude is expected to reach a demand of 102.2 million barrels per day in 2024. So that's what people are building in, at least at the moment, in crude.
All right, so that was the crude check for you. Now, moving on, let's discuss this in more details. More macro data that came in from US, where the December CPI reading has come in at 6.5%, in line with the estimates. The street was expecting inflation to slow down in the US. As it is, this reading could help determine the size of the Fed's next rate hike. Now, core consumer prices has risen to 0.3% on a month-on-month basis. Now, remember, last month CPI came in at 7.1%. Now, let's take a look at what the experts are making of this print.
I'm very bullish about equities in 2023 globally, and I think that the data we had today frankly underpins that, because basically this sharp drop in inflation, albeit it was in line with expectations. And I think what's happening with the data today is people are saying, sell the news that maybe the market anticipated this nice drop in inflation and wait for the Fed to give us their reaction, if you like, and some sort of change in rhetoric. My own view is you're probably going to get another 75 basis points of rate hikes, but we're very close to the peak, and as far as I'm concerned. And I think that's very good for the equity market in 2023. Dollar goes down, bond yields have peaked, and the Fed is very close to ending their tightening campaign, even though I'm not sure they're going to be able to cut rates in 2023. Now, what the economy is doing is a couple of points I make very quickly here. You may well get a mild recession in 2023 in the US.
Well, and the US economy, beg your pardon, is primed for disinflation this year, but the path back to the Federal Reserve's 2% target will be bumpy, according to St. Louis President James Bullard. He also said inflation remains high, but is moderating. Meanwhile, the Federal Reserve Bank of Philadelphia leader Patrick Harker said that while the central bank needs to raise rates more to cool off inflation, it can probably do so at a much slower pace compared to the action of last year.
Right, and Apple CEO Tim Cook will receive a pay cut in 2023 to $49 million in total compensation, the company said in a filing with the SEC. Cook requested the change, Apple said in the filing, following a shareholder vote on his pay package. The company also reduced the number of restricted stock units Cook would receive if he retires before 2026.
Well, and Porsche managed to increase its global deliveries last year by 2.6%. This was despite worldwide supply chain issues that crippled other car makers, as well as sales of its first all-electric car. Luxury vehicle sales have fared better than mainstream models amid high interest rates and inflationary pressures. Ultra-luxury automakers Bentley and Rolls-Royce both reported record sales last year.
And Brazilian President Lula da Silva said that security force members were complicit in letting an anti-government mob ransack the seat of power in Brazil. He promised to remove supporters who may have been loyal to Bolsonaro. Investigations have begun to see who was responsible for letting backers for former President Jair Bolsonaro storm and vandalize the presidential palace.
Well, in Hong Kong, mortgage applications for mainland Chinese buyers rose to a record high in the fourth quarter. This underscores the group's growing influence in the city's property sector. Mainland buyers with Hong Kong residency represented 11.5% of the mortgage applications, the highest proportion since the firm started tracking data.
And more news from the tech space. Cognizant today named former Infosys President Ravi Kumar as its new Chief Executive Officer with immediate effect. Ravi Kumar will succeed Brian Humphreys, who steps down on the 15th of March. Talking about joining Cognizant, Ravi Kumar in a statement said that, I quote, "I am honored to join Cognizant, a company I have long admired for its dedicated client focus and its track record of innovation."
Well, and the Global South is bearing the consequences of global uncertainty. That's the word coming in from Prime Minister Narendra Modi from the Global South Summit. What is the summit about? Here's an explainer.
Now, India is hosting the first summit of all those countries that constitute the Global South. That summit is an effort to give a voice to the unheard nations and thereby leverage India's role as the current president of the G20. But the question is, which are the countries participating in the summit, and really what's on the agenda for the participants at the summit? That's what we're here to explain. The term Global South has been coined to refer to those countries that were left out of the industrialization revolution. It's the opposite of Global North, which refers to colonial powers of the industrial era. It comprises low-income countries, mostly from Asia, from Africa and South America. The Global South today, facing economic uncertainty thanks to the rise in crude oil prices, also food and fertilizers, and rapidly deteriorating global economic growth. India hosting this two-day summit of the Global South countries to give a voice to the unheard nations. The summit has gained significance because India now is the president of the G20. Prime Minister Narendra Modi has addressed Global South countries and has flagged concerns over the impact of the Russia-Ukraine war. Listen to this.
It is clear the world is in a state of crisis. Excellencies, we, the Global South, have the largest stakes in the future.
Speaking, the Prime Minister has also addressed the high inflation pressure that most countries are facing and has said that it is impossible to predict how long the instability is going to last. India, of course, has organized 10 sessions at the summit. Each of these sessions are going to touch upon sensitive subjects like inflation, the rising debt levels among developing nations. These are some of the subjects that will be covered. The purpose of this summit is to give these countries a united voice on the global stage that is currently dominated by the likes of US, Europe and China. India has emerged as an important foreign power as it has refused to buckle under the pressures of the West on sanctioning Russian oil. India's G20 presidency is expected to give these developing countries an opportunity to take a firm stand against being dragged into taking sides on the conflict. It's expected to give them an opportunity to focus on furthering their effort to end poverty and sustained spending for their social welfare programs. Of course, the big question remains, will India be able to give these countries the voice they need that's going to enable them to focus on their own issues rather than pay the price for instabilities that are caused by the West?
All right. With that, it's time for us to slip into a short break. You don't go anywhere. There's lots more action coming up on the domestic front on the other side.
Well, in a major relief to both the central bank as well as the central government, the headline retail inflation has been recorded at 5.72% for the month of December. Second month of numbers that will give comfort to the government. Let's listen in to our own editor, Maithili Busnarmat's take on the state of the economy.
Well, the government is having a bonanza of good news after the good news we saw last week on the GDP front, where the GDP growth numbers for this year, the advanced estimates put growth at 7% as against the RBI's number of 6.8%. Today, the government got a bonus by way of inflation coming in lower than estimates and the industrial production, index of industrial production coming in way higher than estimates. Inflation for the month of December came in at 5.72 as against 5.9 for the month of November, lower than the estimates, most of which were in the range of 5.9%. As against this, we saw in the case of index of industrial production, we saw the index of industrial production, which had contracted by 4% in the month of October, actually increase in the month of November. So November IIP moved up to 7.1%, and we saw manufacturing, which is where jobs come from, which had contracted in the previous month. In the month of October, it had contracted by 5.6%. As against that, manufacturing grew by 6.1%. Even better, capital goods, which is basically investment and which lays the foundation for further growth in the economy, increased by over 20%. So all in all, very good numbers for the finance minister as she goes in the final lap of the preparation of the budget. Remember, these are the last numbers that she gets before she presents her budget on the 1st of November. So we're really having a bonanza, as I said, of good news after a long time of bad and dismal news. So clearly, chance for us to cheer.
Well, chance for us to cheer, that's the word coming in on the Indian CPI numbers. Now, sources tell your channel that Apex Partners will sell its stake in Shriram Finance via its arm. The floor price for it is 1,300 rupees, which is 1% discount to the current market price. The offer size is 5.3% equity with green shoe, with the total offer size being $316 million. This roughly brings the deal size to $275 to $300 million. Now, IIFL and others are likely to be the book runners of this deal.
Well, and from marathon to music festivals to movies, ET Now brings you its weekly recommendation. Tune in to that special segment.
Hello and welcome to this week's ET Now Recommends with me, Ankita Saxena. India's biggest and most famous running event, the Tata Mumbai Marathon, is finally here on the 15th of January after a hiatus of 2 long years, with over 55,000 participants taking to the streets. Touted as the biggest participative sport in the country, it is also the single largest fundraising platform, raising over 266 crores since its inception in 2004. Tata Mumbai Marathon has not only put India on the global map of distance running, but is also considered a bucket list run for most running enthusiasts. This race starts at 5:15 am from Chhatrapati Shivaji Maharaj Terminus in South Bombay. You can also watch it live from home on Sony Sports Network from 6:45 am onwards. The ongoing Mumbai Urban Art Festival, organized by the public art organization Start India Foundation and Asian Paints, explores the interconnectedness through its new theme Between the Sea and the City. The 2-month event that starts from the 22nd of December to 22nd of February at Sassoon Docks has a talent that ranges from artists from India and abroad. Lollapalooza India 2023 has finally unveiled its much-awaited lineup, featuring over 40 artists, 4 stages and 20 hours of unforgettable music, art and culture. Lollapalooza brings its multi-genre music experience along with its brand of unique, diverse and exciting flavors of music to Indian shores in a 2-day musical extravaganza held at the Mahalakshmi Racecourse in the heart of Mumbai from January 28th to January 29th. Well, the seats are filling out fast for that one, so be sure to grab your tickets as soon as possible from Book My Show. Now, while those are the events that you could be attending, here's what you could be watching over the weekend. A quirky comedy starring Ishan Khattar, Siddhant Chaturvedi and Katrina Kaif, Phone Booth is a light-hearted comedy now streaming on Amazon Prime Video. Poe and his friends are back, and this time they are on a mission to find the legendary Time Shang weapons that could help them beat a powerful evil in the Kung Fu Panda The Dragon Knight Season 2 only on Netflix. And after a successful first season, Hunters has returned for Season 2 with its stellar star cast of Al Pacino, Josh Radnor, Logan Lerman and more. Hunters Season 2 has just released on Amazon Prime Video. With that, it's a wrap on ET Now Recommends. I'll be back next week with some more recommendations. Well, with that, it's time for us to slip into a short break. But before that, let me just quickly take you through the lineup that's waiting for you on the market. First up is Kartikeya Natarajan of Cyient on the earnings. We also have Karan Tarani on the PVR Inox merger roadmap. We have Pankaj Tibriwal of Kotak Mutual Funds at 9:20. We also have C. Vijay Kumar of HCL Tech again on the earnings verdict. And we have Anish Shah, Managing Director and CEO, Mahindra Group, on a special segment, CEO at Work.
Welcome back. You're watching Market Cafe on ET Now. I'm going to quickly take you through how Asian markets are faring, and before that, let's try and break down how US futures are doing. US markets closed in the green, futures are roughly flat, and what we're looking at is largely Asian markets making gains. But the Nikkei at the moment is down 1.2%, but other than that, we're looking at all indices pretty much in the green. We're looking at the ASX 200, which is up around 0.9% in early trade. The Kospi also up around 1%. The Hang Seng absolutely flat, but trading with a positive bias at the moment. and the Shanghai is up around 1/3% as we speak. So we're seeing gains across the board, especially on Asian indices, and so is the SGX Nifty. SGX Nifty is up around 1/4% as we speak, just above that 17,950 mark, inching towards the 18,000 mark. So that's at least the start. And Ankita, that's where we were even yesterday. So really need to try and understand as to where this is going to go later through the day. But quickly moving on, gold breached the $1,900 an ounce mark, and that's not seen since May of last year. So clearly gold significantly gaining, and we're looking at gains on silver and copper as well. So at the moment, all these three sitting very pretty. We're looking at cryptos also making substantial gain, with Bitcoin up 7%. Bitcoin is currently above the $18,800 mark as we speak. We're looking at the US 10-year yield fall off 10 basis points or thereabouts, especially after that inline inflation number, if I can call it, but steeply falling inflation number of 6.5%. So we're seeing the US 10-year yield come in at around 3.45%, at least in early trade today. The dollar index too has fallen. We were at 103 at the start of this week, Ankita. We're currently sitting at 102.2. So really steep fall across the board where the bond yields as well as the dollar index is concerned. But that's where we're at. We're looking at a positive start on the Nifty, around 50 points higher as we speak.
Thank you for that roundup, Harsh. Looks like good set of data might just help the markets in this year. Here's hoping for it, but let's look at the earnings that came out yesterday. First up, we had Infosys, which reported a better than expected Q3 results. IT majors revenue grew 20% year on year. PAT increased 10.5% on a year-on-year basis, while the margins missed the expectations slightly. More surprisingly, and one which the street will share, is that they revised their Q4 guidance upwards. Now let's listen in to what their management had to say.
In terms of what we see in the environment, we are not commenting obviously on the financial year 24 and what the guidance or growth in that year will look like. What we do see in terms of demand environment is what I shared earlier. We see some areas, for example, the mortgages area or the investment banking area and financial services. We see some areas in telco and high tech and some in retail. There is more variation. We see in the European markets more concerns on what's going on with the economy. The US market is also there, but relatively less so in the US with respect to Europe. We will see how this plays out, because this is not a scenario where it's the same for every industry. For example, we've seen extremely strong growth in energy, utilities, that part of our business, and we continue to see that in Q3. We saw very strong growth in manufacturing, and we continue to see some of that traction in our business in Q3.
Well, I also have with us Anisha Jain, who obviously tracks IT for us, to take us through and give us a breakdown of those numbers. Anisha.
Well, it was a solid showing from Infosys all around. If you look at the constant currency growth, that came in at 2.3%, much better than our expectation of 1.2%. And that's the reason the company has actually upgraded their guidance for FY23 to 16 to 16.5% now. Earlier, this number, what they were expecting was between 15 to 16%. Though as far as the EBIT margin is concerned, they have maintained their guidance at 21 to 22%. Let me talk about the Q3 numbers then. Solid beat not only on the top line, but if you look at the other internals in terms of deal wins as well as attrition, it's a solid show there, because the attrition has come down meaningfully this time around. From 27.1%, it's down all the way to 24.3%. And also, if you look at the deal wins, it was a solid show of $3.3 billion this quarter, which is the highest that we have seen over the last 8 quarters. Remember, the street was actually expecting a number of anywhere between $2 to $2.5 billion, and this is much better than expectation. Even if you look at the margin performance, yes, it's lower than what we were expecting, because we had penciled in a number of around 21.9%, but 21.5% will be taken well by the street, given that the strong top line has meant that there is a beat on the profit level as well. The profit figure came in at 6,586 crore versus the expected 6,550 crore. So a solid show coming in from Infosys all around, whether deal wins, whether attrition, as well as top line, solid show.
Right, so good set of numbers coming in from Infosys, and on to more upbeat earnings from yet another tech company. HCL Tech also posted a stellar set of numbers, with its revenue, profits and margins all beating the estimates. However, the tech company has revised its Q4 FY23 revenue growth lower to 13.5 to 14%, while also making a downward revision in their EBIT margins. Now, I have with me my colleague Anisha back with the breakdown of the numbers for you. Anisha, over to you.
Well, HCL Tech reported a good set of numbers after the strong showing that we saw from TCS and Infosys. HCL Tech too managed to beat expectation as far as top line is concerned, as the constant currency growth came in at 5% versus our expectation of a growth of around 3.2%. The dollar revenue growth came in at 5.3%. We were working with a much lower number because the dollar absolute number came in at 3,244 million as compared to expectation of 3,180 million. Rupee revenue too jumped up by a solid 8%. Not just that, there is a big improvement on the margin front as well. The EBIT margin came in at 19.6%, and that compared with our expectation of just around 18.8%. So big beat coming in on the margin front, and an expansion of 160 basis points on a sequential basis. Consequently, the profit is looking much healthier than expected, very close to 4,100 crores versus our expected 3,700 odd crores. Not just that, there is also good news in terms of the other internals. Attrition has cooled off substantially, so 21.7% as compared to 23.8% last quarter, and the TCV continues to be quite steady between that $2 to $2.5 billion mark. The guidance for FY23 has been narrowed. Not a big surprise there, given the fact that they're already indicated that growth will be on the lower end of the range of 13.5 to 14.5%. It's now narrowed to 13.5 to 14. As far as EBIT margin is concerned, that too has been narrowed to 18 to 18.5% earlier, though they were quite confident earlier that they'll be in the band of 18 to 19%. And that just tells you that growth in Q4 might be a bit challenged. So that is something that we'll watch out for. But overall, a decent number coming in from HCL Tech.
Well, thanks for that, Anisha. And here's a management bite on the third quarter performance. Let's quickly listen in.
Business as well as our HCL software business. Our services business grew 15.4% year on year and 2.2% sequentially in constant currency. We posted an improved EBIT of 19.6%, driven by improvements in our services business and a huge uptick coming in from the seasonal gains that we have in the software business. Overall, we are continuing to see a good demand environment, especially deals which are IT operating model changes is a very important theme, and we are seeing significant traction there. Cloud adoption is another theme on which we are seeing some good traction. And the third element is vendor consolidation. We see there is a significant amount of opportunities and wins that we've had on the vendor consolidation. So vendor consolidation, cost optimization, and integrated opportunities.
And well, we also have my colleague Lisa waiting for us to take us through all the brokerage notes that came in on HCL Tech and Infosys. Over to you, Lisa.
Well, the brokerages are quite upbeat on the numbers, and they have provided target prices which is anywhere between 13 to 30% for Infosys. So starting with Morgan Stanley on Infosys, they have maintained an overweight on the stock at a target price of 1,670 per share. They see resilience in the revenue growth. However, recovery is still lagging the peers, and the key monitorable will be the strong execution on the new deal wins. Moving on to Kotak, they have marginally raised revenue and EPS forecast by 1%. They have maintained a buy at a target price of 1,700 odd per share. Lastly, on Nomura, they also have maintained a buy on the stock, and they provided the highest target price at 1,900 per share, which is at around 28% upside to the current market price. They see strong deal wins, which will increase growth visibility in FY24, and they expect expect the growth outperformance versus TCS to continue in the near term. Moving on to HCL, Morgan Stanley has come out with a report on HCL Tech. They say that the strong growth in core services business plus the healthy order intake that can potentially provide a surprise on the revenue growth. Also, it expects the company to maintain a healthy margin band of 19 to 20% in FY24. Lastly, on Kotak, they have maintained a buy on HCL Tech at a target price of 1280 per share. Though they see upgrades in EPS, however, they see a slight moderation in the growth because of declining tech spends in the future. So that's on the brokerages, on the Infosys and HCL.
Well, thanks so much for that, Lisa. And we'll stick to the IT pack. Wipro is all set for its Q3 results today as well. And although the street is already penciling in some seasonality as well as higher furloughs, the constant currency revenue growth is pegged at around 1% versus the 4.1% on a quarter-on-quarter basis, while rupee revenue is seen at around 23,180 crores. So what can we expect from Wipro? We have Anisha back with a preview on Wipro's Q3 numbers.
Well, yes, Wipro is expected to come out with its earnings, and as far as the top line growth is concerned, we are working with a constant currency growth of 0.9%, which will be towards the lower end of the range of 0.5 to 2% growth that the company had given us guidance at. Separately, if you look at the IT services revenue, we are expecting a number of around $2,800 million and rupee revenue of around 23,180 crore. Margin is expected to remain fairly tepid at 15.2%, and that's because there will be an impact of 2 months wage hike that will come this time around. So any impact of better currency or utilization will get offset by that. Consequently as well, PAT figure is around 2,950. Now, as far as the growth is concerned, it's going to be a bit impacted on account of furloughs as well as the weakness in consulting business. And the other thing to watch out for will be the Q4 guidance, which the street is expecting will be anywhere between 0 to 2% for Q4. Separately, we'll watch out for hiring because it was a bit tepid in the last few quarters. The commentary for FY24, growth outlook, how the deal pipeline is looking like will be important to track, as well as the scale up of recent acquisitions.
Right, so all eyes out will be on Wipro today. Its Q3 earnings are due. Let's go across to my colleague Lisa, who's ready with the stocks that you need to watch out for in trade today. Over to you, Lisa.
Yes, so NCLT approval, the much awaited NCLT approval for PVR and Inox scheme, that has finally taken place, and they have allowed the scheme of amalgamation. According to Elara View, a consolidated entity may post around 7,100 crore for FY24. Market share gains and growth that can re-rate valuations going forward to 16 times forward EV EBITDA. And Elara also sees a potential valuation of 23,100 crore for the merged entity.Moving on to Shriram Finance, Apex Partners, they have decided to sell Shriram Finance stake via its arm, which is a block alert, and floor price is at 1,300 per share, which is at a discount of 1% to the current market price. Offer size is around 5.3% of equity with green shoe option, and the total offer size will be around $316 million with the green shoe option, and the base size will be $150 million. LTTS will be acquiring Smart World and Communication Services from L&T. The transaction will be around 800 crore, and LTTS will be funding this acquisition via its internal accruals, and the closing is expected within 3 months. On Shah Metallics, they have updated on the pellet expansion for the Odisha plant, and that has completed 8 months ahead of schedule. That will be adding 40% additional capacity in the plant for producing pellets, and the capex is around 360 crore, which has already been done to increase the pellet production from 3.6 metric tons per annum to 6 metric tons per annum. Lastly, on Lint India, they have commenced the construction of its new air separation plant at Punjab, and this will be the second plant in the northern region. This is a 250 tons per day plant, and that is expected to start towards the end of 2023. So, well, these are the stocks that investors will keep on their radar for today.
Well, thanks so much for that lowdown, Lisa, on all the stocks to keep on your radar. But quickly moving on, 2022 was a stellar year for several stocks, but M&M has hit it out of the park. Will the trend continue is the real question. M&M MD and CEO Anish Shah believes it will, as they continue to offer value to shareholders. Here's a slice of that interaction in the latest edition of CEO at Work.
We are very happy about that. We made a number of commitments. We have been able to deliver on them, exceed them as well. And I'm glad that the market is rewarding us for that.
Your stock was one of the best performing stock on the Nifty for the year gone by. Does that make you feel happy, or you said, look, I don't care about markets?
We have been the best performing stock in the Nifty for many years in the past. So for us, that is a high bar and one that we will continuously strive to meet. So just 1 year itself is good, is a starting point. I think we need to do that for many years.
Can I say last 12 to 18 months was all about repair? It was about surviving the COVID storm. Now the company or the group would be in investment mode where growth and new businesses would flourish?
That's right. And we've started that already. So we've gone on a growth mode. We started initially, as you said, with repair. There were a few actions that needed to be taken. And the good part is that we could take them fairly quickly. So we wanted to get to an 18% ROE. Initially, we felt it would take longer, 3 to 5 years. But as it turns out, we're there already. And that gives us a lot of confidence that we can do a lot more. And therefore, we pivoted to growth about a year ago. And we're really driving that growth across all our businesses. We feel that our businesses are positioned extremely well and will scale up very nicely.
And well, it's that time of the news that we give you news fatafat. Now, the first up is International Monetary Fund Director Kristalina Georgieva said they will maintain 2023 global growth forecast at 2.7%, even as she flagged concerns about a stubborn inflation and urged the central banks must continue to press for price stability. She warned that 2023 would be another tough year for the global economy. And former Union Minister Sharad Yadav passes away at 75. Remember, he was elected 7 times as a member of the parliament. Yadav was one of the tallest socialist leaders of the country, remained at the center of Janta politics for decades. And PM Modi will be flagging off the MV Ganga Vilas luxury cruise today at Varanasi. The cruise is said to be the longest river voyage and will cover 3,200 kilometers over 51 days, crossing 27 river systems and several states before ending its journey in Dibrugarh in Assam.
Well, and cracks are being witnessed in Karnaprayag, about 80 kilometers away from Joshimath. People with cracked houses have been requested to vacate and shift to night shelters. A slight relief from the cold wave in northern India as the IMD predicts a slight rise in the temperature in North India from Monday. Temperature to rise about 2 degrees due to the prevailing and approaching western disturbance. And the Men's Hockey World Cup is all set to commence from today. This will be the 15th edition of the prestigious tournament. India would be hosting the World Cup in Bhubaneswar and Rourkela. This is the second time India is hosting the World Cup in a row.
Well, with that, we'll wind down on the show. You don't go anywhere. There's lots more action coming up on the market. Thank you so much for tuning in.